Everybody, this is still week 8 lecture 1, but this is part 2, the second lecture for today. So in the previous lecture I have covered everything related to topic 5. So now you are doing a new topic 6. Starting from this topic, you will learn about management accounting. Okay, the title for topic 6 is Accounting for Manufacturing. So basically, this topic is Introduction to Management Accounting. You will learn about what is management accounting, and then what are the differences between management accounting and financial accounting, etc. So you will see. Okay, this is the first thing. Remember about this. Management accounting is a branch of accounting that can be used to help manager to make business decision. The person who do management accounting is called management accountant. Management accountant works under manager. The highest level manager in a company is called CEO, Chief Executive Officer. So, Chief Executive Officer and other managers, they have to make many business decisions every day. They have to decide about production, like how many units to be produced. They have to decide about price, how much is the price for this product. They have to decide about whether to open a new branch or not open a new branch. They have to think about how many laborers have to be hired, etc. There are many business decisions has to be made every day. So these managers, they need help. They need somebody to help them to make the decision, the business decision. So management accountant using management accounting helps the manager to make business decision. That is what management accounting and what is the management accountant. So the 2 points that you have to remember is management accounting is a branch of accounting and it can be used to help manager to make business decision. The second point is the person who do management accounting is called management accountant. And also another one, management accountant works under the managers, maybe CEO, maybe human resource manager, maybe production manager, and this management accountant helps the manager to make the business decision. Okay, so given that management accounting is done to help manager to make business decision and to help manager to do their work, then we also have to know about managers, something about managers. Okay, so this is the thing that is that you have to know about manager. Okay, work of management or work of manager. So given that management accountant works under manager, so you have to know what are the works of manager, the function of management or the function of manager. So basically, if a person is a manager, he will do 3 functions. First, he will do planning. Second, directing and motivating. And the third function is controlling. So let's see, we will see one by one. So what is planning? So if a person is a manager, one function that he has to do is to plan for the future of the business. If the manager is a production manager, he has to plan how many units the business or the company has to produce this year, this month, this week, this today. So that is the thing. He has to plan, to do planning. And the way management accounting can help the manager in doing the planning is the management accountant can prepare budget for the manager. So budget is one thing that the manager can use to plan for the future of the business. Okay, the second thing that a manager has to do, or the second function of a manager, is directing and motivating. So the logic is like this. The manager already has a plan for the business. He has to prepare a plan for the business. The second thing, after he has prepared the plan, he has to do the thing. He has to implement the plan. So to implement the plan, he has to do directing. Directing means he has to direct the workers under him to do works. This worker to do this, another worker has to do that, another worker has to do that. That is directing. And at the same time, when a manager directing workers, he has also to do motivating. He has to motivate the workers. Workers are human. Workers are not machine. If a person works with a machine, then there is no need for motivation, no need to motivate, because if you work with machine, you just set the machine, connect the machine to electricity, turn on the machine, and then the machine will do things. But if you work with people, you can direct people, but after some time people get bored, so you have to motivate them. One thing that you can do to motivate workers is you can promise the workers bonus. If the business makes high profit, then you promise to the workers they will get bonus. Another thing that can be done is bonus is something that can be used to motivate the workers. Another thing is you can set penalties. So if the worker works below the certain goal that you have set in the business, then you can penalize the workers. Maybe no salary increment, no promotion, etc. So motivation has to be done by giving things, and also can be done using penalties. Both can be used to motivate people. Okay, and then the third thing, or the third function of a manager is he has to do controlling activities. He has to control the things that happen in the business. Okay, see here, the control function ensures that plans are being followed. Feedback in the form of performance report that compare actual results with the budget are essential part of the control function. Controlling means the manager has to make sure that things that are done are same like the thing that has been planned. Okay, so the way to do the controlling activity is, the basic way to do the controlling activity is to compare the actual result or actual data with the plan or budgeted data. For example, let's say the manager is a sales manager or marketing manager. So the controlling activity that can be done is to compare the actual sales with the budgeted sales. So let's say the budgeted sales for the month of April 2021 is $120,000. That is the budgeted number. But at the end of the April 2021, the actual sales is $135,000. So how to do the controlling activity? You compare the actual sales with the budgeted sales. So when you compare the actual sales and budgeted sales, for my example, the difference is 15,000. The actual sales is 15,000 higher compared to the plan or budgeted sales. So that situation is favorable. That is good. If that is the situation, then there is nothing that has to be done. But let's say for the month of April, the budgeted sales is $120,000, but the actual sales is $110,000 only. So when you do the controlling activity, you compare. The actual sales is $110,000 compared to the budgeted sales or planned sales is $120,000. So the difference is $10,000 unfavorable. So when there is a significant or big unfavorable difference, then as a manager, he has to investigate, and then he has to do correction to make sure that next month or next time his department or his branch or something will perform better than the budget, or at least it seems like the budget. That is the controlling activity. The activity to make sure that the thing that has been planned is it seems like the thing that are done. Okay. Controlling is very important. If the situation is unfavorable, then the manager knows he has to do correction, he has to investigate, he has to increase his effort, etc. Okay, so at these three levels of or at these three functions of management, the one thing that the manager can use in every function of management is the budget. The manager can use budget to help him to plan for the business. The manager can use the budget to help him to directing and motivating activities, and then the manager also can use the budget when he wants to do the controlling activities. That is, budget is one output of management accounting. The person who is responsible or can do or prepare the budget is the management accountant. So that is one thing. But there are many more management accounting outputs that can be used by managers at every step or at every function of management. Okay, this is the thing about the control cycle, about the three functions of management. See here, planning is about the formulating long and short-term plans, and then implementing plans is related to directing and motivating, and then controlling is related to measuring performance and comparing actual to planned performance. This is like a circle. If you are a manager, you have to do these three functions. This one and this one and this one again and again and again. So always remember, management accountant helps managers when the managers has to do these three function of management. Okay, the second thing that you have to know that will be covered in this topic is the difference between financial and management accounting. So see, financial accounting in topic 1 to topic 5, you have learned about financial accounting. You have to learn about how to record business transaction, and then at the end of the process, you have learned about how to prepare the financial statement, the income statement and balance sheet. That is financial accounting. Now, starting from topic 6 to topic 10, you are learning about management accounting. So see here the differences between the financial accounting and management accounting. So the first one, I think the first thing that you have to know is the difference in terms of output. Okay, I think that difference is not written in this slide, but remember this: the output of financial accounting is financial statement, but the output of management accounting, there are two main outputs of management accounting: budget and cost report. Budget and cost report. Cost report is a document that shows the calculation of costs for a product or service or a department or a branch or anything, any cost driver, any cost object. Okay, so that is the main thing. Always remember, the output of financial accounting is financial statement. The output of management accounting budget and cost report. Okay, the second thing is in terms of users. Okay, remember this: the main user of financial accounting is the external users. The main user of financial accounting is external users. A business, for a company, remember businesses can be a sole proprietorship, partnership and companies. Okay, so for a companies, the companies has to produce financial statement, and the main user of this financial statement is the external user. A company has to prepare financial statement and publish the financial statement to the people. The main user of that financial statement is investor who wants to invest. They will use the financial statement to check whether the business is good or not. Okay, that is financial accounting. Remember that the main user of financial accounting information is external user. But management accounting, the output are budget and cost report. The main user of the main user of management accounting output is internal users. Internal users are workers and managers. So they will use the budget and cost report every day when they do their activities. You cannot disclose or share management accounting output to external users. No, because management accounting output, like budget and cost report, are supposed to be confidential. If you share the budget for a business to other people outside the business, then that is not good. The other people can use the budget to beat your business. Okay, so that I hope you can understand that budget and cost report are confidential, supposed to be used internally only, cannot be shared with people outside the business. Okay, I have explained or discussed about two differences in terms of output and users. The third one, I will discuss only several items here, maybe 4. Okay, number 4, the difference is in terms of GAAP. See number 6 in this table. GAAP means accounting standard. So when you do financial accounting, you have to follow accounting standard. Everybody has to follow the accounting standard when you do the financial accounting. When you prepare income statement and statement of equity and balance sheet for a business, you have to follow the same format according to the accounting standard. Every company has to use the same format according to the accounting standard. The reason is when every company use same format, then you can compare income statement company A and income statement company B and income statement company C and other companies. You can compare because they are using the same format. That's why they have to follow accounting standard. But when you do for management accounting, the management account information is to be used internally only. You don't have to compare with other companies because the management accounting information is confidential. So for management accounting, there is no need to follow any accounting standard. You have to prepare budget, etc. According to the needs of a business or according to the requirement made by the manager. Remember, management accountant works under managers, so they will do things according to the requirement or request made by the managers. They don't have to follow any standard. Okay, that is number 4 that I have discussed, I think. So another one that I want to discuss is number 4 in this slide. Precision versus timeliness. Okay. So remember this. For financial accounting, the emphasis is on precision. Remember when you learn about financial accounting, you have to record everything in precision, precisely. You have to record everything accurately. You have to debit account and credit account with the same number. If you put wrong number or if you do errors, then your balance sheet is not correct. The amount in the left side of the balance sheet will not equal to the right side of the balance sheet. Your trial balance also not correct. Okay, so that's how it shows that in financial accounting, the emphasis is on precision. But for management accounting, see here in this slide, for management accounting, the emphasis is on the timeliness. The logic is like this. Remember, management accounting is done for managers. A management accountant works under managers. So when the management accountant works under managers, the emphasis is to do things quickly. Manager has to make business decision every day, very quickly. So for management accounting, the emphasis is on timeliness. So the management accountant has to calculate cost quickly, to prepare budget quickly, etc. So the emphasis on the time is on the time. You will see later in management accounting, in order for the management accountant to do things quickly, the management accountant will use many estimates. Because if the management accountant wants to collect actual data, then the management accountant has to wait until at the end of the month or at the end of the year. So it is too late. the manager wants to make decision quickly. So the management accountant has to do their works quickly. So at many times, management accountant will use estimates when they do the cost calculation and also when they prepare the budget. So there are several more differences here. I hope you can read this in the textbook. Have explained 4 differences, I think, at least 4 differences only. Thank you very much. This is the end of the second lecture for today. Do not forget to write your name and metric number in the comment section. Thank you very much.